Hello and welcome to our special series Asian Tigers, where I've been going about Singapore and Hong Kong trying to get you some of the best opinion after what has been a cracking start to the year, not just in India but across emerging and developed markets. My guest on the show today needs no introduction. Samir Arora of Helios Capital has been investing in India for as long as I've been following it, so he's my guest today. Samir, good to see you again. What are you doing now? I mean, what's the positioning after such a strong rally?
Actually, the thing is that although it's been a strong rally, you have to say that it is also because there was a very weak November and December. So I am living on that it's a rally which was needed, but it's not like a runaway and out of control in that sense. So our net exposure is still high. We are around 70% net. In our fund, we are always short some 30-odd%. Sometimes it goes up to 40-50%. Right now, it's about 100 long and 30% short for a net of 70%.
So has it been trimmed in the last few weeks as the markets have gone up?
Actually, I had become negative in December, thinking that demonetization was going to have a serious impact and that maybe it'll take a few months for everything to come back. But fortunately, I climbed back quite fast, but still missed the first 10-15 days of Jan. And since then, I haven't, because many things have changed. First is that the world seems to be in a synchronous kind of a recovery where US is doing okay, Europe is doing okay, Asia is okay, China is not doing badly, in fact, pretty okay. And secondly, in India, the flows went into mutual funds, which we thought was a big picture, long-term benefit of demon, but not realizing it'll happen in like a 2-week period. And then we had to recover what we had lost in the first 2 weeks of Jan, which we seem to have done this month, at least quite stylishly. So it's okay now. We are just keeping it. Let's see how it goes.
Are you feeling slightly dizzy, though, where the markets have reached? Or because every market has gone up, you're...
Yeah, that's one big reason. As we have done, that is, India has gone up some 14% in dollar terms this quarter. But last year it was down 4% in dollar terms, or maybe rupee terms it was 1 or 2% or something. So it's not a runaway in that sense, but for the quarter it is good. But if I say look at over 5 months, it's nothing. So we are
sustainable, you think? Or do you see
the thing is, as long as it doesn't fall 10% in a month, we don't mind anything. If it falls or hangs around here or goes down 2-3%, we actually like that, because that is how we outperform, because in a negative month we do better than the guys who are long only, and in the end that is our goal, and it has happened for 10-12 years. So little bit of correction we don't mind. A big correction, what happens, you may outperform, but in absolute you also fall, because still it's 70. So that spoils one part of the story, that you may outperforming but by losing less.
How do you choose your shorts, since 30% is still short? How do you choose shorts in a market like this?
This year, the first 1.5 months were very bad for the shorts. So then we have to back off. So then we said we will short stocks where there is no event for 2 months. Okay. So if you've announced a buyback and that event is over and there's no result, I can hang around and short you for the moment, because I don't only need protection or view that it has to fall, but I also need protection that the market may fall for some unrelated reasons.
Which sectors do they belong to?
Mostly they belong to tech sector. Like 3-4 of them will belong to tech sector. Some of them will belong to consumer. Some of them, while sleeping, by being awake, you can be always short, which are mostly state-owned banks. In sometimes what happens is you start with only 1.25, we start as a starting. And then you add half, then you add half. What happens is, even if they go up 10-20%, if you keep adding, at one point they'll correct. You may not make a lot of money, but you'll be able to walk away with the protection provided for free. Actually, that has been our thing. That is, since 2009, the market is up in rupee terms more than 200%. And we've had an average short of 30-odd% of the book. And we haven't lost money. We haven't made money if you look at it cumulatively over that period. But that is not the intention. The intention is in 11-like period, 13-like period, you make a lot of money. And then in other periods, you have lost a little bit, but broadly, you didn't have to spend anything on puts. You didn't lose anything, and you got much higher alpha because of that. So our alpha is like maybe India's highest, because it reduces the thing without a cost. Sure. That's the idea.
But you said IT shorts. You have any IT longs too? Or
right now we have one long for about 3% and shorts will be around 8%.
That's a huge underweight relative to the sector.
That we don't see unless we are overly, hugely underperforming. We don't look at what the index is. And broadly, we haven't done that for some time. So I haven't exactly looked at, I know it's about 18-20% must be.
So you're bearish on IT?
No, so we think that there are so many things happening. that there is no need to be excited about it in any way, and maybe a little bit bearish. Yes, it does. That's the thing. See, for me, the short doesn't mean it has to fall a lot, but I want free protection against the market.
How do you see this global synchronous move? Because it's been about 3-4 months old now, 18-20% in many markets. Do you see a speed breaker coming?
Yeah. See, that can easily happen. India, you could say that some of it people will not buy in April because we wouldn't know on April 1 if we buy, what tax should we be booking? Are we to book 7.5% tax? So anyway, everybody will take 15 days to figure out futures. If I do in my own name, am I GAR compliant or not? Nobody's told me. I have to make my own estimate of whether I have, so should I be deducting 33% tax or zero? These are all things which will confuse the whole market for 15, 20 days. Arbitragers will be confused because one side will be futures which has no tax and one will be the cash if they buy or sell. So all from India point of view, that can lead to a much lower liquidity in the first, maybe a month even. And in a big picture sense, you can say this may be timed along with the fact that the market has gone up so much that it anyway needs a pause. But the pause always comes with some excuse, which looks a bit more, one-to-one. So on that basis, I thought. And secondly, in US, we can see now that Donald Trump is having a bit of problem in pushing through his agenda. Today, they say that the NAFTA agreement that he wants to now negotiate is much softer. People may not mind that it is softer, but that would also mean that he's not getting what he was supposed to do.
Do you think that might trigger a US correction?
I think that can do a little bit, because I think now people won't believe that there can be a 15% tax rate in US. Maybe 25%, which anyway normally I think the corporate actually pay only that much.
What do you expect from earnings starting April? Do you see this year we finally getting back to 15% plus? Or?
We are very consistent. We have been saying that forever that we are about to get it this year. But this year I think it may happen a little bit, because if you see, look at the steel prices and all these commodity stocks, which I don't own broadly speaking. But if you look at them, you can imagine that they were given a lot of protection in terms of anti-dumping, and then their prices are higher and stuff like that. So many of those could have massive swings in these,
But it will be primarily commodity type.
Yeah. The earnings, how can the private sector can have a little, private sector, let's say financials, which is what we buy mostly. What extra growth can you get? Little bit extra, maybe HDFC goes back to 22 instead of whatever it is. Things like that a little bit can happen. The change will happen only in the sectors which were beaten up. That doesn't mean I want to buy them still, because I think they've also gone up. It's not that they haven't gone up. For 1 year, I think Tata Steel might be up some, God knows, 150% or something. So it's not that therefore I'm saying buy it, but the earnings could change. So I think earnings can grow 12, 14, 15%.
Why do you still steer clear of commodities? And you've always never been comfortable owning them.
Because when I do own them, by the way, right now I own one in futures, but I don't have the guts to buy even 2%. And at the slightest panic, I will walk away, because my heart is not in these trades. I can hold many stocks even if they're down 20, 30% or they don't go up for many years, because we believe in that. And we believe that we have some understanding of what is opportunity size, what is this company's strength. In this company, we say we don't know, but supposedly China is cutting something, some production of steel, therefore something is up, therefore I will buy it. But so you can go along for the ride, which we try to do, broadly have never succeeded. But that's how you survive for 25 years. You cannot survive by saying, I like only this, and therefore I will sleep for the balance 21 years of my 25, so that's what it is.
What are your new bets? I know financials. Don't tell me HDFC Bank, but...
always. So in that category, we have all the 3 or 4. Kotak, IndusInd, HDFC.
Housing Finance?
Yes Bank. I'm saying the private sector bank.
Of course.
We have all the categories. We have insurance, we have brokers, we have every this thing. In the banking side, I think the smartest guy now, I think, is Kotak. The other side, we own brokers too. We own 2 or 3 is housing finance, and we own all the 3 insurance companies.
Okay.
So there are 2.5, but we own...
Still no public sector banks?
Public sector banks, we are short 3 of them for about 7%.
Okay. No ownership, zero?
Zero.
Okay. Any NBFCs?
Yeah.
No, not brokers and all. The lenders, like the Shriram Transport and the microfinance.
Microfinance, I used to own all the 3 of them till November. Okay. Now I would be happy to not ever have them. I think I have permanently shifted my this thing, because in the first round when these two new companies got listed, and we bought them on day one, and we sold them November and December. But broadly speaking, now I think that anybody who bails them out or buys them out, I may even become negative on those companies.
You're not happy with what IndusInd is pursuing?
If it is pursuing, we don't know, but I would take it as a negative. Even though we own the stock that is IndusInd, I think it would be a big negative.